All right, we've hit the first quarter of 2011 now, and I'm sure this is a question that a lot of people kind of have on their mind, or at least they're going to gather information and see where it is all at. But where are commercial real estate values today?
I think it's taken a while for lenders to realize where values are, to actually swallow the bad tasting pill that everyone is faced with right now. Values are really down to the 2000 year level. We have interest rates that have been very low, historical low, that have driven cap rates down and pushed prices to their highest they've been. And that is just without the lending market. You've got all cash buyers in the market. There's very little demand. Businesses aren't expanding. We're at half values of where they were in 2007, at half. And lenders need to understand that, and they may have data on an appraisal that's 2008 data, maybe 2009. But there's very few transactions and not enough data to really support where buyers are. There's just a big gap between buyers and sellers. And I don't see that the appraisal data, and I think appraisers are having a really hard time grasping with the lack of information and still being able to generate a value that they feel comfortable with. There's a resource called CPPI index, and it shows a curve that just drops, and it shows values on average back to year 2000. The only properties that are trading at decent cap rates of what we've seen recently, because cost of capital is still very low, are Class A product. $100 million, $200, $300 million properties, newer buildings, with long-term tenant lists. Other than that, we've got cash buyers. We don't have liquidity in the market, and that's where the market is today.
And that's where, as we were talking about with your partner Marty, Sage can and their auctions can be a real factor in actually getting more value, and you got to look at that net value you get out of it than you could by just a normal listing.
Right, as a lot of asset managers and I think the people above them are focused on, this is what our appraised value is, this is what we want to get, this is our threshold. Well, in reality, you need to be looking more at what's my net recovery. As I hold this for a year, I've got to pay taxes, insurance, maintenance. I run the risk of all sorts of liability, people on the property, vandalism, or broken pipes, which leads to mold and damage, and it just goes on and on and on. And you want to avoid going through all that and move through sell the property quickly. You don't want it just sitting out there rotting, because as the weeds grow, the value goes down, your costs continue to rise, and you're not getting any more money for it. And actually in this market, it's been quite the opposite, where values have gone down. So your cost goes up, value goes down, just doesn't make any sense. The sooner you've moved out of property, you net the higher value. And that's what they ought to be pursuing.